What's going on, guys? Welcome back to a brand new inter-equity trading video. Today we're going to be going over gold. I know many people out there love trading gold. It's probably one of the most favorable assets out there. So I thought about teaching you guys and showing you guys one of my favorite models to trade gold specifically. So pay attention. I hope you guys enjoy. If you do enjoy videos like this, please leave a like and a comment down below. Turn those noties on. Enjoy the video. All right, guys, we're gonna start off on the higher time frames. As per usual, we always start from the higher and we're gonna work our way down to the lower. What can we see right away off the back of the 4-hour time frame? Big sell-off to the downside, taking out lows here, and finally more internal lows to the left-hand side. So let's mark this on. Perfect. From there, we move bullish, and we move bullish right to internal right here. Okay, so we clear that high, we run that liquidity, and immediately we get a pullback in the market. Now, this is when I want you guys to start identifying where liquidity is and why. We always talk about letting the market communicate to you where liquidity is. So we can all agree right here. Check this out. High taken, lows are being respected every single time, even down here. Okay, we get that pullback and then continuation. This low respecting this low to the left-hand side. All we have to do now is mark out this low and wait for price to trade below it. We didn't just mark out this low because of some pattern, whatever happened. No, this is purely based off logic, okay? We simply let the market communicate towards us that this low is respecting this one, so therefore, we shall return to this one sooner or later. And of course, we're bullish in this scenario. We want to see price back up to the upside. So you'd want to be buying below here ideally. After we print this low again, come back and respect it, and look, we move bullish to the upside and we take out highs once again. Now we have to ask ourselves, why is this important? Once we take out this high, this induces buyers into the market. And look to the left-hand side. If I mark out this whole area we are tapping into, look how we stabbed right into it and we get a reaction to the downside. Now, again, we're not predicting there's liquidity above this high. The market literally just communicated it towards us. If sellers are entering right here, where are their stop losses going to be? Above this high here, and maybe even above this one to the left-hand side. So you can mark on here, or you can mark it on the next one to the left. It's completely up to you. Let's just mark on this high here for the sake of this video specifically. Tap in and look at this big sell-off, and would you look at that, runs right to the lows that we marked on beforehand. Why? Because we had liquidity below this low. Now that we get this false move from high to low, now we want to see that move back up to the upside, because this move again from high to low induces sellers, but not only induces sellers, it traps buyers. Now, that's when we want to look for entries. That's when we want to capitalize on a move back up to the upside. So sitting in live price action right now, you can see how price has taken out some internal highs. So expect some sort of a bearish move, whether that's a pullback, a retracement of some sort. You have to anticipate some sort of reaction to the downside. Why? Because we have taken out some sort of highs, okay? Now, in order for us to buy this market, remember, all we need to do is identify where buyers are being induced, okay? We need to see a buildup of liquidity. So let's follow along. Okay, so we get a pullback. Remember, after taking out these internal highs, anticipate some sort of bearish price action. Now, we're not going to be buying just because we stabbed out internal lows here or even lows here. No. We need to react to what current price is telling us. And you always want to identify when traps are occurring. And look what's going on right now. This low was printed in the market. Why? Look at this area from the left-hand side. I'm going to grab it, drag it over. We got a reaction here. And look at this bullish move up. Sharp, fast, aggressive, taking out a high here. Why is this important? Let's mark it on. You can see that this is a BOS for retail. Now you have to understand, why did this reaction occur and where did it occur from? This low from the left-hand side. You grab this low out. Now you need to wait for this low to get taken out. Any price action, let's just say price comes down to the low and it goes long. All of this PA is irrelevant. We do not want to be involved in it. We want to buy below the low. Anything that happens above it, irrelevant, we do not want to be involved. Typically, it'll just be a trap or just a liquidity buildup of some sort. Again, avoid that price action. We're going to have liquidity below this low. Again, we have a bias back up to the upside. Don't forget about where this move is coming from, who's induced in the market currently, sellers. Now on the lower time frame perspective, we've identified buyers, early buyers getting induced. Now we want to take the entry once they get trapped. Look, here's the liquidity once it gets taken. And would you look at that, we have a perfect liquidity block right below. And I can just stay on the same time frame. We don't need to refine nothing. Look how easy it is. Our stop loss, just like we've taught you guys in previous videos, it always stays below this low to the left. Okay, so that's what we're looking like. For you can use a limit, you can use a market entry, whatever you're comfortable with. Nonetheless, our entry goes there and we are targeting highs on the way back up. Look at this. That is almost a 1 to 8 on an entry that is just taken on, what is this? You can even say the 30-minute or even the 1 hour time frame. And you're looking at almost a 1 to 8. So this is a great example of being able to take higher time frame entries on gold. Like we just previously discussed, early buyers are induced, no problem. Now we want to see those buyers trapped, taken out. Look at that move back down. Boom, we are in the market now. Okay, early buyers are trapped. Now we want to take advantage. Let's see how this plays out going forward now. So the market gives a nice reaction. We always talk about this. Remember, we want price back up to the upside. Sellers are induced. So if we see any bearish pullbacks, any sort of retracements, deem them to be false and short-lived. And if I just press play here, check out this move back up to the upside. Look how every single time we tap into these areas on the left-hand side, this whole imbalance over here, we're tapping in. This is inducing sellers, guys. Remember, look at these lows we've taken out. Once we take out those lows, induces sellers. These are all going to be known as traps. You do not want to trade for them. Okay, you let this trade run all the way back up to the next point of liquidity, which is going to be these highs. And there it is, right as we run it back up to these highs. Look, we take it, target is met. That is almost, again, that's almost a 1 to 8 on a higher time frame entry. So powerful on gold. This is a model I use consistently. Debatably my favorite asset as well. You guys can understand why we targeted this high. We literally let the market communicate to us which high to target, okay? This high, respecting this area to the left-hand side, that is now gonna be a future target, okay? And look how that plays out. Perfectly to a T. All right, guys, thank you for watching today's video. A great model I use on gold consistently on a daily basis, I would say. But again, very powerful. If you guys do enjoy videos like this, please leave a like, leave a comment down below of future videos you want to see from us. We'll talk soon, guys.